Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, y'all. Ira Epstein of Linn Associates with your weekend video update, and this is for the financial markets on December 15th, 2017, about 4:15 p.m. Central Standard Time. What are the events? Well, Bob Corker, Senator Corker, now going to vote for the tax bill. Mario Rubio voting for the tax bill. Even if Ms. Collins holds out, which I seriously doubt she will, the pressure now goes on the senators to say, okay, are you going to be the one that doesn't let the party pass a generational bill? And I don't think so. So I think what we're going to get is our Christmas present. I do think the tax bill's now going to pass. The stock market is building that in, as are a number of other markets. So it'll take some big setback over the weekend that we don't know anything about now for that to happen. Before I get too far, I'm going to talk at the end of this about my charting course. I'm offering a Christmas special price. You got to use the word XMAS, no apostrophe. When you go, if you're going to buy it in the coupon area, it will give you a $30 discount off $109.95 price. That's $109.95. It's a good price. I can tell you it's going to go up next year. The price, forget the sale price of the $30. I'm going to raise the price of the course anyways. When we look at the E-mini S&P, got to remember that the Decembers went off the board today. It was triple witching day, big volume. You'll see that. But a monthly chart's a monthly chart, and I just want to show you where you're at right now. You're up 18.75 points for the month at a new all-time high on a closing basis. When we go to the weekly chart of closes, same thing. All-time high on a weekly chart, closing prices, very strong. This is just a weekly bar chart, and you can see the market by itself, new highs, new high close. When we take a look at the swing line study, and this is a chart without the swing line, this is the swing line. I teach this in the charting course. What a swing line does is I built an indicator that looks to see from the prior day, should this brown line, you can make it any color you want, go to the current day's high or low. It looks to see, are we making a higher high day, a lower low day, an inside day, an outside day up, an outside day down. One of the things you use with it is if you believe that a trend is made up of higher lows and higher highs, it puts those here. Now, it can label every one of these at one time for you. I just don't want that many numbers on the chart. And you can change the colors. Up numbers can be blue, red, whatever the heck you want all the colors to be. It'll make it for you. But I look at it and I say, okay, visually I can see that I've got higher lows, higher highs, and the number I don't want to see taken out is 25, 55, 50. That would break the pattern of higher lows and higher highs. I can look at the current settlement price, look at that and say, whoa, in order to get down there, you'd have to break 100 points. What is that worth per point? Got it? That's how you work with it. Another thing that I do is I use filters on each of the studies. I use 5 different studies, and you'll learn about those. If you watch my videos here, you're seeing not all 5. You're not seeing the window envelopes, and you're certainly not seeing how I use all the different moving averages. But when you're over the 18-week moving average, my definition is the market is in a bias to the upside. So now I've got the swing line, which is the trend up, and the bias is up in the market. One of the tools that you'll find traders look at for resistance and or support points are Bollinger Bands. Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time. Bollinger Bands can go sideways or they can have a trajectory. In this case, the trajectory, and I think you know it for a very long time, especially on the weekly charts, has been to the upside, and that's exactly what is occurring. The market is riding the band, it hits it, backs away, hits it, backs away. Does it always have to back away? No, but if I turn here, you'll see more times than not, it's exactly what has occurred. So it's a tool that professional traders say, hey, maybe there's a point where I take money off the table. Why do I say off the table and not going short? Because the bias is up in the market. It's one thing to come out of a market. It's a very different thing to say the trend has ended, blah, blah. You might be looking for a pullback within a trend. Slow stochastics are a momentum index made up of two lines, the K and the D line. On the weekly charts, I use them different than I use them on the daily charts. Here I'm just saying you're in a very bullish mode. The market is carrying up, and that's the end of it. When the red line eventually closes back under 80, I'll have a different opinion, or it just turns down from these high 90s. Hasn't done it yet. Therefore, everything's bullish. Same thing in the slow stochastic on the NASDAQ, and I typically run these numbers between 80 and 20. I'm going to teach you in the charting course a few tools that I don't show here. You're seeing also in this market higher lows, higher highs. Now, why the weekly chart? Sometimes the weekly chart keeps you in understanding that the daily chart might throw out an interweek moving change at you, but if it doesn't violate the weekly chart, it could be noise in the market, and this is still carrying the rest of the day. Again, I go through that in the course, but you're in an uptrend. The upper resistance now, 65.41. You finished off at 64.78. The E-mini Dow, bias to the upside. Market running the upper Bollinger Band, but again, not trying to close, very much over it. And I think you can see that over and over. What else do you see on this chart? Look at how long the bias has been to the upside all year. All year long, this market has stayed on a weekly basis over that 18-week moving average. Very strong market. You're not going to see this a lot longer like that. You're going to get to a point in 2018 where corrections start happening, and you'll say, Ira, how do you know that? Well, number one, I don't. But I do think after an 8-9 year business cycle, we will hit some point with the higher taxes and so on where the markets will get some corrections during the year. This has been unusual. This is still, in my opinion, what we call the Republican, the Donald Trump rally, and it has continued on any way you want to cut it. You may hate the man, but he is delivering on tax promises. We have infrastructure to talk about next year. Keep that in the back of your mind. In the Russell, I've circled this because you can see this is now a period where a market is starting to say, if you believe that momentum leads price, that this particular sector is not ready to join the smaller sectors. It's breaking down, if anything. You've got to get these numbers back up, and they're not there. So I will not be surprised to see that the market on the daily chart starts acting a bit more bearish. This market is not trending, by the way. It's got a lower low and a higher high. It has upside bias because it's over the 18-week average, but momentum is pointing down. In the VIX on a weekly chart, and yeah, I'm putting back up the weekly this time for you. Normally I show you the daily. Notice how it too has been stopping at the upper Bollinger Bands. Now, if you go to the daily, you see it really shoot over that number. You get a better picture as to when you look at the weekly how this market has stopped. Also notice, remember what I was saying with Bollinger Bands? Sometimes you get sideways channels in them before trends kick in. You have been in one for over a year. Just a sideways broad channel. When the market reaches down, you've seen me talk on my daily charts where I say, you know, you get down to 8, it's pretty hard to get a 20% drop from there. And you'll go, why? And I say, well, from 8, you got to go down to what, 6.5? It's very difficult. It's much easier to go from 8, 20% up. And you've seen that. You don't get many thrusts down to the lower Bollinger Band. You learn to work with that. You learn to work with a few other tools so that you can adjudge that. When we come to the slow stochastics and the 10-year notes, I just have the scale wrong here. Momentum is still pointing down. The trend is down. You've got lower highs, lower lows. You're under the 18-week moving average. The objective could be 123.18. Now remember, if you look at this market and you go to the bonds, you're going to see a different world because they keep doing this. We're still getting higher interest rates in the shorter term parts of the market, the 5 and the 10-year, whereas the bond market is not going up in real yield. In the dollar index, we have what's called noise right now in the market. What do I mean by that? Number one, you're not trending. You got a higher high and a lower low. Number two, the market was in a downtrend and it has shifted into that sideways action. From this shift will come a trend. The longer the market can go sideways, like it was doing here, see how it was sideways right through there? Ultimately, the bigger move out of the trend, out of that sideways action into a trend. I say this market is not trending right now. It's noise, as I call it. You have bias up because you're over the 18-day average. Momentum, slightly up too. I'll call it that way. Eurocurrency, you have what's called a higher high, right, but a lower low back here. You're not trending here. What else do you see very clearly on this weekly chart? The sideways action you've got and momentum pointing down. So you've got noise in the markets. Admittedly, we had a lot of central bank meetings this week. Admittedly, you're at the end of a trading year. Admittedly, currencies are often the best trending of all vehicles I've ever seen. They're not doing that right now. Not a surprise at year end. The Aussie dollar, even with this bounce in the market, you've had lower highs, lower lows. You're bouncing away from the lower Bollinger Band. The market's momentum is still bearish. It's going sideways. In the Canadian dollar, you're under the 18-week moving average of closes. Momentum is still pointing to the downside. The bias is down because you're under that, but you're not in a trend. You have a higher high and a lower low in this market. Japanese yen, battlegrounds, the 18-week moving average of closes. It's been that way, my friends, since right here in September. The market has traveled down and tried to get to the lower Bollinger Band. It's missed it on the weekly charts. It's hit it on dailies from time to time. But the battlegrounds right here, the market's still sort of caught trying to figure out which way to go with it next. We then go to a daily close only, and this is daily, not weekly, of Brent versus WTI. As I have pointed out during the week, I thought that the $6.50 difference between the two was enough to really get American producers going. The Baker Hughes came out today, and they did not show an increase in the oil rigs out there. That was a surprise to me, in all honesty. We'll see if that's just a delay or something, but you're also not carrying that $6.50 premium anymore. The market's trying to break down under $5.90. Is the trend still up? Well, if you look at it, I could argue you've got higher lows, certainly higher highs. If you take out this low that you made the other day, right there, 585 is that? Yeah, that could be a sign that too much premium and they're going to take more out of it. Remember, Brent has a good story going for it because of the 40s pipeline that supplies the UK still being down. In Brent, trying the upper Bollinger Band, didn't quite get there. 65.83 was the high this week. That's 66.92. Momentum is still bullish. It's starting to wane a little bit, so you pay attention to that. Same in the WTI crude, but you got the higher highs, higher lows, still very much in the bull camp. Where the market fell apart was nat gas. Lower highs, lower lows, you're at the lower Bollinger Band, so you're in an area that for no reason you can find short covering. Momentum still pointing down on that market. Remember what I said about my charting course. Let me tell you what I try to do. 5 indicators. They give you a basis to work with. And how I do it is I create a PowerPoint first. That's a video. There's 6 hours of videos in the course. And what that is it teaches you the concept first of, say, the swing line. Then I take you to a chart and I remove, in many of them, the name of the chart. I want you to just see price action, and I teach you how to draw this by hand even, because you're going to learn price and risk associated with it. Then moving averages. Yes, you're seeing a few of the averages I use here on these charts, and there's so many more. You're only seeing a tip of the iceberg. There's more to work with than this, and there's tools to work with them. I give you the basics because you get filters on everything. The slow stochastic oscillator, I learned this from the pro, George Lane, who developed it. Then I took it another level for you, and that level will teach you slow stochastics, I guarantee, in a way that opens your eyes. Bollinger Bands, another friend of mine, John Bollinger, used to have him on my TV shows. He showed me that. Window envelopes. I know so many of these guys over the years that I was able to pick brains, talk to them regularly, learn. And I bring all that to you. And I redo my course every couple of years. So it's another thing. I'm always adding to it. This year I'm adding a library of technical indicators, things of that nature. But you're going to learn to look at a chart like this. This one doesn't show the slow stochastic, but it shows window envelopes. It's going to show moving averages. Not all of them either in this chart. If I put everything on it, you'd say, what am I looking at? I'm not trying to do that. I want to make it simple. When I built this chart, I built it for my then teenage son. I have expanded it over the years. It includes you. But the one thing I do is KISS. Keep it simple, stupid. So you get my writings, you get the mornings where you come in, and I hammer away what you're learning. I'm going to cover 40 charts. I'm going to talk the swing line. I'm going to talk window envelopes. I'm going to talk Bollinger Bands. I will not talk over you. I will talk to you. And I start setting you up for what the day's activities look like. I do that at 8:30 in the morning when we reopen the grain markets and the meat markets. So I've got everything open at that point in a way that we go. The course normally is $109.95. It includes, by the way, my charting software. If you haven't used it, of course, it's perfect. And then my access to my research, all for 30 days, admittedly. I want you to be a subscriber after that. But how do you get all this? You're going to call us at 866-973-2077 or go to my website, www.iraepstein.com, under the word education. Go down, read about the course, remember the code, XMAS. Take advantage of the discount and learn. You can give it as a gift, by the way. If you have somebody you want to give it for, buy it. Just let us know. We will not start the charting software, the research, anything, until we give it to them. We'll let them know that you bought them a gift, and away you go from there. I'm Ira Epstein. Thanks for watching. Have a great weekend. I'll see you all Monday.